So we're going to talk about a guy who basically solved the market. This is the story of a code breaker who went from cracking national secrets to financial ones. And in the process, ended up becoming maybe the greatest investor of all time.
All right, let me just throw a question at you, and it's going to sound, well, impossible. How did the most successful investor in modern history average, get this, 66% annual returns for decades? I mean, that doesn't just beat guys like Warren Buffett or George Soros. It completely blows them out of the water. So what was the secret? How do you do it?
Well, here's the kicker. He did it by basically never picking a stock, by never reading an annual report or making a single prediction about the economy. The man's name is Jim Simons, and his whole strategy had zero to do with gut feelings or expert analysis. He found a totally different path.
Okay, so to really get how Simons cracked the code of the market, you got to understand where he came from. And spoiler alert, it wasn't Wall Street, not even close. He was from a world of pure math, patterns, and, well, code.
Just look at this resume. It's wild. He gets his PhD in mathematics at just 23. Then, during the Cold War, he's a top-tier code breaker for the NSA. After that, he becomes the chairman of a university math department. So you see, this guy was a world-class expert at finding hidden patterns long before he ever placed a single trade.
So eventually, he does dip his toes into trading. And he tries it the way everyone else does, using his intuition. And he absolutely hated it. The emotional highs and lows, the stress of it all, it literally made him sick to his stomach. And this right here was the turning point. He realized the biggest thing holding him back wasn't the market. It was his own brain.
And that realization led him to this kind of incredible idea. If human emotion is the problem, then the solution is to just get the humans out of the way. Completely. It was time to build the ultimate trading machine.
And this quote from Simons himself just sums it all up, right? He said, "I don't want to have to worry about the market every minute. I want models that will make money while I sleep. A pure system without humans interfering." He wasn't looking for a slightly better strategy. He wanted to build a machine that ran on pure logic, totally free from fear and greed. So what did he do? He started a company called Renaissance Technologies, and it was the complete opposite of a typical Wall Street fund. Traditional funds are full of MBAs and analysts making big predictions based on their gut feel. Renaissance? Nope. It was packed with PhDs, scientists, people who lived and breathed statistical analysis and hard evidence. They didn't do predictions, they did algorithms.
And get this, his hiring rule was crazy. He didn't just prefer scientists. He actually saw Wall Street experience as a negative. It was literally frowned on. Why? Because he thought that people from finance would bring in all their biases and old ideas about how the market should work, and that would just get in the way of figuring out how it really works based on the data.
So, what happened? What was the result of this totally weird experiment? Well, it was a super secretive fund, only open to employees, called the Medallion Fund, and it would become, without a doubt, the most successful hedge fund in history.
Yeah, it all boils down to this one single number, 66.1%. That was the Medallion Fund's average annual gross return for 30 years. That number is it's almost unbelievable.
Okay, this chart really shows you the power of that number. Let's say you put $100 into the S&P 500 back in 1988. By 2018, you'd have about $1,000. Hey, not bad. But if you'd put that same $100 into Medallion, even after they took their huge fees, you'd have over $2 million. It's not even the same sport. It's a totally different game.
So you're probably thinking, okay, they must have been right all the time. But they weren't. Not even close. Listen to this quote from Robert Mercer, the former co-CEO. He said, "We're right 50.75% of the time." Think about that. That's just a tiny bit better than a coin toss. But the secret was they were 100% right 50.75% of the time. They made thousands of these tiny bets, and that tiny edge compounded over and over, well, that's how you make billions.
Okay, so let's try and decode the secret sauce here. What were these computer models actually looking for?
The whole strategy is called quantitative investing, and here's what that means in plain English. Instead of trying to figure out why a stock's price is moving, they just crunched insane amounts of data to find tiny little patterns that weren't random. That's it. They were treating the market like a giant encrypted message, and they were just trying to find the key. And Simons had this great way of explaining it. He said something like, "I don't know why the planets orbit the sun. That doesn't mean I can't predict them." You see, he didn't care about the why. He didn't need a good story. All he needed was for the data to show that a pattern existed and was predictable. The why was totally irrelevant.
So this is really the core idea. They weren't looking for one giant, flashing buy signal. Their system was built to find thousands of super faint signals buried in all the noise of the market. We're talking about things that a human would never, ever spot. These tiny little echoes and patterns that were just too small and too weird for our brains to process.
And you know what? That's exactly why it worked for so long. They were specifically looking for the stuff that made no sense. The current CEO, Peter Brown, put it perfectly. He said that if there were strong signals that made a lot of sense, someone else would have found them and traded them away ages ago. Their real advantage was in finding the patterns that nobody else could even explain.
Which, of course, brings up the million-dollar question, right? If this was so amazing, why didn't everybody just copy them?
Well, the answer is that it wasn't just one magic bullet. It was a whole formula that was basically impossible to copy. First, you had this unique culture of scientists all working together, not competing. Second, they had a decades-long head start on just collecting and cleaning all their data. Third, and this is huge, they had iron discipline. No human could ever step in and say, "I don't trust the model today." And finally, they had the pure computing firepower to make it all happen.
So when you step back and look at the big picture, what Jim Simons did was so much more than just make a ton of money. He proved that the market isn't just random chaos. It's a system. A really complex, noisy one, sure, but a system full of hidden patterns. And he proved, beyond a shadow of a doubt, that our human gut feelings are no match for a disciplined, data-driven approach.
So, what's the ultimate lesson here? What can we all take away from the man who solved the market?
I think it comes down to this. When you're facing a really complex problem, and it doesn't have to be the stock market, it could be anything, the best approach isn't to rely on your ego or make big, bold predictions. It's to approach it with evidence, with discipline, and maybe most importantly, with the humility to trust the data, even when, especially when, you don't fully understand it.